August Biniaz here with CPI Capital. We're at the Multifamily Conference in Toronto, and we're excited. We ran into CPI's own Director of Acquisition, Paul Hopkins.
Yeah.
Paul was on stage speaking with investors. Give us some feedback. How was it talking to over 500 investors who were there learning about underwriting? How did you give them a brief understanding of underwriting? Tell us about.
Oh, man. Well, I mean, I could go for days talking about underwriting. So I had to like condense it down to a 30,000 foot view of basically, how do we look at the rent roll? How do we look at the T12? What's in place rents versus market rents versus pro forma? And how do we put it all together? And then how do we break it? How do we, stress test the model to ensure that, we're looking at every different factor, and it's a lot to cover in just an hour. So
yeah,
it was good. It got a lot of feedback, got a lot of great questions. At the end of the presentation, I put up a QR code so people could download our underwriting model along with a video of me explaining it, because there's a lot of little tweaks that you could do to pull all these levers to make numbers work, and so it's understanding what those levers do.
Yes, so. And I believe we have over 300 signups, people trying to download that underwriting model. Now, talk to us of if somebody's looking to get into the multifamily space and not necessarily syndicating or putting a fund together, but wanting to buy a multifamily property, what level of understanding of analysis do they need to have? Do they need to be an expert on Excel and underwriting model? What's the advice there?
Yeah, not at all. I think first of all, just trying to understand who can do this. So there are other syndicators like us. We can definitely educate people on what makes a good deal, what doesn't make a good deal. So not everybody is an Excel expert. Not everybody is a capital raising expert. Not everybody understands financial engineering. So it may not click with a lot of people, but I think it's important to really see other syndicators' models and have the syndicator kind of explain to you, what happens if there's no rent growth? What happens if, hell goes in the handbag and there's a significant increase in cap rate.
What you're describing is as an LP investor who's looking to invest in with a syndicator.
That's right.
I was more speaking about if someone is, not really an LP investor, but if somebody who wants to buy a 20-unit apartment community, or 20-unit apartment building, what level of understanding of analysis do you need to have in that case?
Good question. Well, if you're just getting started, coming to the Multifamily Conference is a good way to get your foot in the door and start learning about these things, but also trying to identify where your strengths are and where your weaknesses are. So for myself, my strength is numbers in Excel, where your strength is more of communication and investor networking. So us partnering together, it's a good pair because you're my yin to my yang.
Absolutely. Absolutely. Yeah.
So just finding those people that match what you lack.
Yeah. And a follow-up question to that. So if somebody has bought some multifamily properties, they have experience in real estate investing, and now they're looking to actually start a real estate investment firm,
right?
Is there a need for a dedicated analyst or a director of acquisition, for example, somebody who underwrites deals and has, as the deals come in, or can that be subcontracted out to a third party?
It could definitely be subcontracted out. But then after a while, there's no real skin in the game, no, I guess, continuity in it as well. So there are guys out there that can help underwrite deals that you could hire, on a temporary basis. But these are definitely positions or skills that you should acquire within your own company for sure.
Got it. That makes a lot of sense. All right. So we currently have a deal under contract in St. Petersburg, Tampa MSA. It's a multifamily value add deal. We've been kind of working on this deal for a year. It came to us. We were, looking at it around 21 million. We ended up putting it under contract at 16.85.
Yeah.
Very happy with that prices, with those bases, 123,000 a door. What are you seeing currently in the market? Are you seeing these prices drop? Is this common, what's happening in the market, deals coming back?
Yeah.
Talk to us about your conversations with brokers.
Yeah. So the last year and a half or so has been pretty rocky, with interest rates going all over the place. And then there's pricing discovery. So sellers have in their mind, what the property is valued at. Like they underwrote this property probably 2, 3, 5 years ago. And in their initial projections, they had a certain number in mind. Well, things have changed in the market, and they're not going to necessarily achieve the number that they initially underwrote to. So it's really educating the seller as well, trying to let them know where the market is currently. So that pricing discovery gap has actually been coming down over the last year. I think sellers are starting to see that okay, they're getting back into reality of really what the property is worth. But at the same time too, there's just lost my train of thought on that.
Yes.
That there's also the syndicators that got this debt, like that may have gone with high leverage octane debt, that they're in a situation where they need to sell.
That's right. Or funds that are wrapping up, like the deal we had was a fund that was wrapping up. Syndicators that they have to sell. So you're seeing more and more of these deals coming to the market.
Yeah. So people that need to sell. If there are sellers out there that don't necessarily need to sell, they're going to hold on to these properties. They're going to what they call survive till 25.
That's right.
And,
That's right.
And so right now, when you see properties that are listed on the market, these are with syndicators or operators that are in a position that they've held this property for a long time. They need to get rid of it, or they're coming up against some other financial crunch, such as a rate cap or loan maturity. So
got it.
You're seeing those types of deals in the market.
Awesome. Talked about survive till 2025. Let's talk about some of your predictions. The markets are, they're predicting that the Fed will probably not reduce rates in the next Fed's meeting, which I believe is in September.
Yeah.
What are you seeing in your conversations with a lot of other property owners, with a lot of other stakeholders, with the brokers?
Yeah.
Is your prediction that the Fed will reduce rates this year, or is the job market just too strong? Give us your understanding.
Good question. At the beginning of the year, I was definitely saying that I think interest rates are going to drop. And now that I've kind of started to see, the CPI numbers and where they're starting to shake out, I think it's going to be probably a long haul for interest rates staying and maintaining where they are. But I think there's also opportunities that are coming out.
And that was my question. So if your prediction that the rates are going to stay where they are for longer, is this time still that Goldilocks time to be able to get into a deal, as long as you're getting a reasonable debt, which is fixed, a low, low anxiety or low what's the term I'm looking for? Low risk type of debt, which is like the 155% LTV we got, interest only for 5 years. Is this still that perfect timing to get into a deal before all that money on the sideline rushes back in?
Yeah, I think right now is a perfect time to get in. Like the hypersupply cycle is over. You can see that even in Tampa that, there's a decline in developments that are going on right now. There's a massive amount and record-breaking number of developments that hit Tampa, Jacksonville, and other locations within Florida, which absorbed a lot of tenants. But now those permits and those projects are now on hold because of higher interest rates and potential interest rates.
Or completely canceled rather than being on hold.
Exactly.
Totally put aside.
That too, yeah. So the hypersupply phase is basically over, and now we're getting into that trough before it's going to go back up into basically a buyer's market.
Interesting. I always appreciate chatting with you. Thank you so much for your time, Paul.